After yesterday's rate cut by the Reserve Bank, its second cut this year, the question is just how many more rate cuts might come this year. Money markets, they back two more in August and in December. And even the Reserve Bank itself was more dovish in its tone, with the Governor, Michelle Bullock, saying the so-called narrow path of balancing the inflation fight versus an economic downturn is now pretty much over. Well, the National Australia Bank has noticeably suggested more rate cuts than the other major banks. Its chief economist, Auld, says there could be 3 more cuts this year. And she joins me now. Sally, many thanks for your time. Give me your own sense as to where the Reserve Bank sits in terms of our economy. If the narrow path of these, balancing rate cuts versus the economy tipping into recession is over, what's the agenda now for the Reserve Bank?
Good afternoon, Ross. So the agenda for the Reserve Bank, as you said, the narrow path is no longer the right narrative for what the bank is doing. I think the narrative for the bank is really about trying to work out what the appropriate stance of policy is, given some quite significant shifts in the global backdrop, but also some interesting domestic dynamics. And as we came into the meeting this week, it was really clear on the Reserve Bank's admission and also on our own analysis at NAB that monetary policy was at a restrictive setting. And so in other words, what that means is that a cash rate a little bit above 4% was continuing to exert a headwind on the broader economy. And I think given everything that's happened offshore and given some of the domestic developments where the bank is now clearly far more comfortable with the inflation outlook and also a little bit disappointed by the performance of the consumer so far this year, I think they made the decision that a restrictive policy stance was no longer the right one or the appropriate one for the economy. And so they are in the process now of assessing, what comes next. And I think there are a couple of options. They can either move to something that's a little less restrictive, like where we are today, post the rate cut, or they could choose to move to a neutral policy setting, which is one that's not really a headwind, nor is it a stimulant to the economy. Or if things deteriorated more than they expect in their central case scenario, there's clearly the case for them to move to a more stimulatory setting. So at NAB, we think they're probably going to choose that middle path and actually anchor towards a neutral policy setting. And on our estimates, that's another 3 rate cuts from now.
So one thing where they did express caution yesterday was about employment. With the unemployment rate at 4.1%, it's quite clear that the labour market still is very, very strong. With rate cuts, if business activity picks up, it's going to consume even more labour. And that could put some pressure on wages into the future and certainly on trying to get more workers into the private sector. What's your own sense of that?
Yeah, so the labour market's a really interesting one for the Reserve Bank at the moment, and one that I think they've got a few question marks around because their internal models are basically telling them a story very similar to the one that you described, which is that an unemployment rate of 4.1 is actually through their estimate of full employment. And so according to their models, that's a tight labour market and we risk putting upward pressure on wages and inflation. But in fact, what we observe in the real data, so when we look at inflation numbers and when we look at wage numbers, what we're actually seeing is the opposite of that. Inflation is continuing to come down, and that's actually been driven by disinflation in areas that tend to be really sensitive to labour costs. So services inflation is a really good example of that. And similarly speaking, when we look at the underlying pulse of wage inflation, we're not getting any worrying signals. And so the Reserve Bank's sort of in this awkward position where its models are telling it one thing, but the actual economic data and reality are telling them virtually the opposite story. So what they're having to do at the moment is just use a little bit of judgment and say, look, we're still paying attention to the models, but we've also got to pay attention to what's happening in the economy and the possibility that our models might not always be right. And so they're willing, I think, just to acknowledge that perhaps what we're learning from inflation and wage data is that maybe the labour market is not as tight as they initially expected. But I think going forward, this is going to be one of those areas that is very much in the grey zone. And as we watch the data come in between now and the next meeting, I think those labour market numbers are going to be very important.
Sally Auld, always good to chat to you. Many thanks for your time today.
A pleasure, Ross. Thank you.